Ladies and gentlemen, welcome back to another episode of Gridiron and Growth inside the minds of champions. And we have a pioneer with us today, someone I'm so excited for everybody to get to hear speak and to learn from. Born in Colorado, Danielle Schutz is the managing partner and managing director of the New Community Transformation Fund, an equity venture capital fund for BIPOC leaders and founders, and she is the president and CEO of Wealth Equity Enterprises, a holdings company that holds several businesses that support the mission of building BIPOC wealth and leadership. Wow, it is great to have you here. And my favorite stat, she was the youngest ever VP, right, at a Fortune 500 company in American history.
We got to give the
Danielle Schutz.
Welcome to the show.
Yeah, I want to start here selfishly. What is a holding company? Because I've learned about this. I still don't understand what a holding company is. What is it?
Yeah, so I have lots of companies that operate, right? So you have employees and you're doing things on the ground. And then I have a holdings company that actually owns my companies on my behalf. So it's an LLC, it's a single member LLC, but it doesn't operate anywhere. So it's just a Delaware LLC that holds my assets. So it protects me. If somebody came after one company, they couldn't come after all of it, if that makes sense, because it's held by a non-operating company in Delaware.
What's good for taxes in
There
Delaware,
you
right?
go.
Yeah, there you go. So at what level do people need to start thinking about a holding company?
Right away. Like I would think about that as soon as you start to think about, starting a business and think about protecting your business and insuring your business, taxes on your business. That's all sort of like the structure of starting a business. So even your first LLC, it doesn't hurt to think about, do I need a holding company? What protections do I need? One of my companies is real estate development. So we hold assets. And so it was important for me at that point to definitely have a holding company that holds my assets or holds my investments so that they're separate.
I mean, you have an incredible resume. So what does it look like to operate on a day-to-day basis as Danielle? What does it look like?
I have the most incredible team. So I think it probably looks less stressful than folks would imagine. I'm not a great multitasker, so I just am really good at sort of putting all the parts in place from a team perspective in order to make sure that we're just cooking with gas. I'm lots of deals right now.
What kind of deals?
Lots of pitches, lots of investments.
So are you taking pitches or are you making pitches?
Both. So when you raise a private equity fund, you both get investors and then you take those dollars and invest. And so we're a venture structure at this time. So I spent the last year raising for the fund as well as starting to make investments. So we started making our first investments this year and had our first close on the fund last October.
Awesome. So what does that fund look like in terms of, so is it all BIPOC founders? And did you say private equity and venture capital, or is it just private equity?
Yeah, so we're structured like a venture capital fund in the way that we make investments and that we're working with startups. But we really have a private equity approach to it because I don't fundamentally.
That's the best way. So shout out to you.
We really had
Yeah.
to do something different. I don't actually fundamentally believe venture is a wealth builder, if I'm being honest. I think it's a real shiny thing that people are chasing right now. And a lot of money flooded the market after George Floyd that said it was going to come in for especially Black founders. And venture was the tool because it's a high-risk asset class. And so I took advantage of that because then it kind of gets the bias out of the way. Because when you say I'm investing in founders of color and women, people see it as more risky, even though there's lots of data to support that it's not. And so you use a high-risk asset class, but we are high touch, and we're actually even going to double down in this market, which is a really tough market compared to where we started on being really high touch and sort of operating in a way where we let founders grow and scale instead of being out there always raising money. So we're going to go start Fund 2 right away, which I hadn't planned on doing, but it's getting in front of the market.
That's awesome to hear, just the fact of the approach that you're taking, being in the intersection of venture capital and private equity in my day job. It's awesome to hear that you are taking a private equity approach in terms of helping these companies operate, get their cash flow, get them profitable soon instead of raising a whole bunch of money and just trying to build so many different products. Can you talk a little bit about what that looks like in terms of the investment?
Yeah, so we're calling this a Blacksher Hathaway approach. I don't know if you're familiar.
I like it. I am.
But most private equity firms don't do startups. They don't do early stage, pre-revenue. You have companies that are way later, 100 million, they know exactly where we're going to get their leverage. So that is the thing that is just going to be really different. There's not a product like this in the market that we know of. And we don't know how to get founders of color and women, which are 70% of our country, from startup to having mature businesses if we don't figure this thing out. And the system keeps them out because you're always raising capital to try to do the next thing in your business. And they have such a more difficult time raising capital that it's sort of designed to just be on this hamster wheel. And most venture funds take really small bets, like they do, hey, let me just invest, 100K checks early stage in a bunch of companies because they're betting a couple will win. Most 8 out of 10 actually don't. In a venture fund, that's not my jam. I don't like that math. So I say we're playing more blackjack versus craps, but just using this structure. So we're cutting bigger checks even in the venture fund. And then eventually we will be taking a majority ownership stake, allowing our founders to run their businesses. I don't want to run a bunch of businesses. So that's going to be a little different than some PEs. So I want, that's important to say because some people get a little nervous when you say PE. But then we provide back office, we do things structurally, and we give them economics in a blended portfolio, meaning multiple companies. So instead of just owning 100% of your company, you have 10% of the vertical of companies we've purchased as a fund. And so your risk is blended as well as a founder. So we can actually build wealth and get people moving. And so this is the strategy we've shifted to and are moving towards on Fund 2 because, hey, I'm out here to build wealth. And I just realized once I got into the system of venture that, oh, I see why this hasn't worked and why 97% of this money stays with one demographic. So re-rig it is what we're doing.
What are some stories about the types of obstacles that BIPOC founders face in starting a company with a good product?
Yeah, you can't grow a company without capital. That's one of it. And we define capital as social capital and financial capital. So those are the two things. So you often have founders who are young, getting into the thing. I have this amazing idea, but never necessarily worked in business or ran business. So we bring that to the table. Like I'm a CFO by trade, just the old school fundamentals of business person. So that is sort of the opportunity and what's been hard, right? I think for founders of color, the system is so biased towards like, you look like me, you talk like me, you went to the same school I went to. So it doesn't matter how good your idea is. Even just getting past folks to write you a check and to take a risk with the bias that's laced into the system, that is just really, really, really hard for founders. And then venture requires you to keep raising rounds. That's how people make money. It's how funds make money. And so you're always out there in that grind trying to raise money. How does one build a company if you're spending all your time raising money to just try to get the next phase built of your product or to get to market or to hire a CMO? And that's another issue, is that every small business is trying to get this talent and pay for this talent with very limited cash, when really, when I was at Comcast, I had 7 regions as a CFO, right, that rolled up. And so I could manage 7 startups as a CFO, and there's tons of talent coming out of corporate America like that we could just put in place. And so they're not worried about it. They're sharing economics. They're sharing CTOs and CFOs and CMOs, which are really important roles when you're trying to create a business strategy behind a good idea. And that gap is as big as the capital gap.
Give us a story specifically about the bias, though. Like, illustrate it for people, because I think people hear like, oh, there's bias in the system. They think, oh, yeah, right, so-and-so just didn't apply online, or they didn't apply with the right information, right? Like, yeah. But that's what people think. There's not bias. It's just a market economy. Yeah. Give us a concrete example. Like, you had one client who had this, and somebody said this about their product, or somebody said this is why it won't work, even though the data says something.
Yeah, it's even more distinct and obvious. It's like you will have one founder go in and they will have $1 million of revenue, and another founder that has no revenue at all, and they'll get a huge check, and this founder still can't raise money.
No way.
It happens every single day.
Just because they look different, they sound different?
Yeah, it's investing, especially the alternative risk investing, is about a lot of gut. It's a lot of, hey, yeah, I think this can work, right? It's a lot of non-business people who run funds who are making these bets in the first place, right? So it's not just founders who need that information. I think I'm a very rare CFO running a fund because it's not as scientific as being a CFO. And so I think that's a part of it, is that it's a lot of gut, and that's good, and it's bad. If you have a system like ours, especially financial systems like ours, where folks don't trust Black folks with money. I always tell people I have been audited 5 times more in my career than others. Like there's the even my due diligence in getting the fund, and even in making decisions right now with some of my investors, it's just obvious.
That's insane. Can you talk a little bit about, to Ryan's point, was there difficulty in terms of raising your fund? Obviously, you just said you've been audited 5 times, but talk about being a Black woman, a woman of color, raising a fund, and then also, just your leadership journey in corporate America. So that's 2 different questions, but just that.
Well, I think one leads to the other. So I do think I built my career here in Colorado, and I am blessed that I have a lot of institutional investors in my fund instead of individuals, and that almost never happens. Most Black women are building a $20 million fund with like 200 investors and those small checks in it. And that has its benefits, but it's definitely the setback, because it's hard to run a really quality fund at $20 million of assets under management, period. And so that is the hamster wheel to be a fund manager of color, the same way it is to be a founder. I always remind people most founders don't have money. Or most fund managers that look like me don't have a ton of money. So they're starting these funds, they're trying to pay themselves, they have assets under management, it's all a fee-based structure. And so it creates a really difficult time raising money. I probably had an easier time than most. I want to acknowledge that. Like, it was hard. It is hard. It felt really hard. It was the hardest thing I had to do. But it was easier than most. I have the state of Colorado in my fund, the city and county of Denver in our fund. It's the first city in the country to be able to figure out a structure to do that. And
CU?
then,
Do you have CU yet?
Not CU. I know.
Come on,
I know what's
CU,
going
where you
on.
at? CU, where you at?
Prime, make it happen.
Yeah, I'm a CU Denver alum, so especially.
Let's go.
And then we've got Xcel Energy and some big players. Bank of America led my founding round. They've done really great work in this space. Better than most. And so that part is good. I got big checks. And so my average check size for the approved capital of the fund right now is $4 million, which is just really rare.
Hey, let's give a round
Shout
of
out to
applause.
you.
I mean, come on. I told you we had a pioneer.
Absolutely.
I told you.
Yeah, so that was good. And it gave me and my team the traction that we're going to do on Fund 2, which at minimum will be a $100 million fund and will be a national fund to pull off the Blackshire Hathaway approach.
Blackshire Hathaway. I like it. We got T-shirts yet? I'm going to need a T-shirt. I'm going to need a T-shirt.
I love
Exactly.
What opportunities are you seeing in businesses right now in terms of you got this pot now and you get to go and invest? Where are some of the opportunities that people are just not seeing right now?
Yeah, this little behavioral economist in me really brought the thesis forward, which is that if you really think about the fact that 97% of the assets that are being controlled, so assets under management and private equity, are controlled by one demographic, so white men, and 90% of venture funds, they went to Stanford or Harvard. So it's not just homogenous, it's homogenous.
Yeah.
And the problem with that, like any investing, is it doesn't diversify, it doesn't de-risk, and I think there's a complete gap in the businesses being funded and what the consumer looks like in America right now. So now you have 70% of the consumers are either women or people of color. Like, that's 70% of the United States population right now. And so there's such a gap, and sort of the caste system and economic system of race has worked so well that I can tell you, based on your gender, where you're born, and the color of your skin, what your net worth is going to be within a very small margin of error. Oh, absolutely. You guys are beating the odds like us, right? That's it. That's it. And the more and more people are beating the odds, which is so beautiful, but the odds are the odds, right? Like, that's real data. And so that's super problematic, but it's also, for me, the opportunity of what we think about from investment. So I like businesses that, some people would say are just not the sexy businesses, but they're going to solve the problem for the masses. So it's a volume play for us. Like, you're going in and innovating on things where I know 80% of the population have to eat. I know 80% of the population are going to be struggling with healthcare. I know 80%. So we're seeing a lot of that. Labor is a crisis already. going to continue to be a crisis. So people that are solving for that, getting people hired, upscale, we have quite a bit of that sort of HR tech. Democratizing investing is a huge one for us, making sure that we're a part of platforms that allow more people to get in to invest in things that might not be accredited investors, and they're making room for that on Wall Street with the SEC as well. So that's really good. We're seeing that. So it's really about like what's the consumer doing? Who is the consumer? What does this country look like? And what is their lived experience? And we're the only ones that can build business to solve for that because we have that lived experience. And so that's the connect we're finding, and we're just finding magic in that space and the stuff I think people aren't even paying attention to and leaving behind because, businesses solve problems. And if you don't think that's a problem, which is literally the definition of privilege, it's not a problem because it's not a problem to me, then you actually aren't going to cut a check to something where you don't see the problem and you don't see the business as a solution. And so I feel like we've got great companies that people just miss that we're going to have a ton of opportunity with.
I want to acknowledge everything that you're doing and everything that you've been saying. I also want to acknowledge the fact that when you're writing checks, and you don't always see this from investors, I know you will know this, you don't actually see them build the ecosystem around the person they're writing the check for, which is super cool that you do that. How do you take a leadership role or a coaching role with your portfolio companies?
Yeah, so I'm doing more of that now that we're not raising for Fund 1 anymore, but I also raised outside of investments. So it's $36 million that's approved for the fund. And then we raised $11 million of sort of operating capital. And I think that was a really creative way to do this. So we got philanthropies in on this. And then the city gave operating capital in addition to investment capital. And that has allowed us to get some fractional CFOs in place or pay for things that they need outside of it. So we're starting that sort of behind the scenes model already around how do we provide back office? How do we just use the same CFO for 3 of our companies? And then, my business partner and I have done a lot. We do a lot of leadership. Like that is at the core of everything. It's like, how do we help grow and scale the leader? Because we're really investing in the founder. Because where we're headed, right? We need that person to be able to grow and scale their business in the future. If we take some of the other distractions off the table, it's really going to be about them and being able to get that business off the ground. And so we want to make sure that we are wrapping ourselves around them in whatever way we can and whatever way we need. And we know a couple will fall out, but I don't think, certainly not 8 out of 10, right? Like I want it to be the opposite ratio for us, that we see 8 out of 10 multi-$100-million businesses instead of $1 billion business, which you have to wonder whether that's a good valuation anymore anyway. And those are better odds anyways. That's better returns for my investors. The math is better. And you actually start to build wealth and community and get capitalism in a more equitable place.
What does that look like in terms of wrapping your arms around that founder, especially from the leadership perspective? Because leadership is a small word for such a huge job.
Yeah.
What does it look like in terms of that coaching or that mentorship and guidance?
Yeah, so I have one-on-ones with every single one of my founders, which I think is pretty rare. So we do every other month one-on-ones, and then we get all the founders together on the other off month. And I think that is critical. Like, that is so critical. This is a lonely, lonely place to be. And I know you know this, that this is hard. And it doesn't matter. It actually doesn't matter. You can still have money coming in, and this is so hard. It's the first time people have payroll, and they're responsible for other people's lives every single day when they wake up. And so creating that space for our founders on the call to say, what are you running into? And it's usually the same stuff. And that really eases your mind. And you're like, how did you solve for this? We've got founders coming together. We just hosted a bunch of health executives here in Colorado with 2 of our companies who are in that space. And they came together to do it. And sort of we sponsored it as the fund so they didn't have to, get that cost as well. So it's just every little thing. And they're starting to come up with really creative ways in which we can support them and reach out to them and help us think this through. And so we're just every day trying to be there for them. And that's going to grow and increase as we really double down on the future strategy.
I know for founders, sometimes imposter syndrome is super tough. Is that a theme at all with the founders that you see? And then also, did you have any with when you were raising your fund?
Yeah, I have imposter syndrome. I've had it every step of the career, every time I've gotten promoted. Like I became a CFO at the state health department for the first time I was 26 years old.
Wow.
So can you imagine like the level of imposter syndrome? Like,
people trying to cut you down too. Yeah.
You know, to the point that it was really almost the end of it in the beginning because it was so overwhelming, and you end up like creating behaviors that don't really serve you. They don't serve your teams. You just are like, you know, you hoard all the information. You're working 17 hours a day. All of that stuff is a sign that that's taking over inside of you. And a little bit, I am so centered. I had my son Kai when I was 16. So Kai's a senior at Colorado School of Mines now. Nice. And a little bit came back to that center when I got my first leadership role, and remember like talking to my team and just being like, I don't know what I'm doing. Like really sat them down one day because I just thought I was going to get fired anyway. So I like had nothing to lose and just go like, help. You know, most of them had been at the state longer than I'd been alive. Like, you know, they had so much to teach me. And so like sort of stepping back from that and letting that be true. While also knowing that I was capable was really important for me. That really set the tone for the leader I have become and am becoming every day. The other thing is that I have a mentor who changed my life with a phrase that I'm going to give you guys. I said, like, he said, well, like, what's a word that's described sort of your career, your journey to this point? And this was only like 2 years ago. And I said, lonely, right? I've always been the youngest the only Black woman, the only Black person. I'm in finance, right? So it's
finance, as we learn, right? Yeah.
I'm 37 now. And it feels like I've lived so many lifetimes already. And if I was like, just lonely, like I just feel lonely. And he just looks me dead in my eyes and like, you're not lonely, you're bored.
Woo.
And I'm like, wait, what? He's like, it's not been lonely, you've been bored. And I've just reframed the entire experience through those lenses. And we don't give women and people of color permission to be bored. Think about it. Think about back to school. What do we do when a little Black boy is acting up? He's
put him in
behavioral issues where he's probably just really bright.
Yeah.
And his brain's working in a way where you've lost him, or, you know, and then he's like, well, what does boredom even feel like on you? It felt like loneliness to me, right? Because it does. It feels like you're in a room and you're thinking differently and no one really thinks of it the same way you do. And what you call innovation, if you look like this, you call like difficult when you're me, like just those things. And I just reframed it. And I think for me, that has allowed me to really shed imposter syndrome in building the fund. That has not been the predominant difficulty in building the fund. And it had its space in other big things that I've done. But in this one, it's been more like, remember what's going on, remember who you are. Like, you know, I've had $15 billion P&Ls and, you know, in investing, they'll use all these terms and it sounds really complicated and it's not. And so it's just like bringing myself back to being able to acknowledge that, even if I'm in a room full of people who don't really want me to do that. Yeah.
One of the things I love, I mean, clearly, you know, Danielle Schutz, pioneer, leader, look out Michelle Obama, right?
She's giving me confidence right now.
Good.
You know, yeah. But, and I don't think I ever told you this, but one of the things she gave me confidence in was when you posted a picture of being in a hospital. You didn't know this, but I was traveling like crazy, and I was literally at this airport, and she posts, I'm in the hospital, I'm overworked, burnout's real, like this isn't all easy. And I like literally, I had to hold back tears. I know what people would do with a 250-pound Black man crying in the airport, right? That could go dangerous, right? Like that could be bad. But I literally felt I'm not alone. Like we want to do these big things and it's exhausting sometimes. We talk about being, we're recalling back to being an introvert, right? Like I figured that out because of, we're going and we're all these places. But how did you get over that hump? What made you share that kind of exhaustion with people? Because you led me in that moment and you gave me strength by saying, look, this can break you if you let it. How did you come to that point where you wanted to share that?
Well, I'll say that I think because my story starts with my son and my daughter, and like by the time I graduated college, I had both of them, and I've always shared that in my career ever since my first CFO job. I realized like I had to like not try to live two different lives. Like it was already too hard, and so I'm so grateful that I have sort of just been honest along the way and been rewarded for that. So then it allows me to do it more and more and more. I think it makes me the leader that I am. And then it's a little selfish, but I share because I can't carry it. Like, I want to be honest. Like, on top of doing it to try to carry everything I'm carrying, like, I've got to share. I have a very everyday, dealing with everyday stuff life. And I think sometimes you get to places in your career where people can really put you outside of. It's as hard for me. I cry. It's normal. I get really sick. I struggle with anxiety. Like, all those things. Like, I'm divorced twice. I'm not even 40. Like, that's real stuff. Like, life is real. Like, this has not been easy. It hasn't been easy on my personal life. It hasn't been easy on my health. And I just think it's important for people to know, like, that you're not alone. But I also think it has given me the ability to remember that I'm human. And so I share that because, and I also think it reminds people of my own humanity, because I'm going to make mistakes, and I'm carrying a lot for a lot of people. I do not take the responsibility of being the first or the only or lightly at all. Yeah. And I want to set the tone for everyone that follows behind me. But then I also have to find the balance in that so that I don't, kill myself. And we all have to do that. Like, we all have to do better. Like, we have to take better care of ourselves. We really do. If you want to do anything big.
I have since then. I can see myself going down that road, and I won't do it. I won't do it. So thank you.
Yeah.
As you're talking through taking care of yourself, like, how are you doing that? Just for the listeners out there, and thank you for sharing that and being open and honest and authentic. It sounds like you can only live that way. But yeah, how are you taking care of yourself? How are you setting those boundaries? What would be your recommendations for people?
Yeah, first I'll just say it's really up and down, because I never want to set a structure where it's like I have this thing figured out, and then, like, when I do have it figured out, it gets harder, and then you have to figure out new ways to do this. I think all along I've been a big proponent of sort of my physical health and in keeping my mental health in check, right? Like, for me, it has started with physical health. I've always been someone who gets to the gym or does yoga. And, like, in this last year, it's been really hard. I'm like, took 85 flights last year. It's like on track for the same.
You got it. Yeah, you got that.
United. So that's a totally different conversation. Sorry, United.
We'll beep it out. Don't worry. We'll make them wonder.
My friends are like, I cannot believe you don't fly United. So yeah, I just, it's been harder to take care of myself. So then it's always like, okay, how do you readjust and find a new routine? For me, it's like sleep and water. But for me, like, laughter and dance. Like, at the end of the day, whatever I'm going through, I have people around me who, like, make me laugh till I cry. And I'll start a dance party anywhere. And I think that, honestly, I have underestimated, like, the value of that in my life. Like, I still find joy in the spaces I need to find joy. And when I'm having a hard time, being grateful, because that you can lose that when this gets too hard. And I'm in that right now where I'm like, how do I find gratitude again? How do I find motivation? I am fighting a system so big, right? Like, I do not want to underestimate that. It all sounds great. It is the right approach, and it is hard, and it is different, and it's different being different. Like, I look different than most people that do this. So, yeah, it's like, how do you just find joy and space and gratitude? And then, like, I got to keep remembering that my favorite thing to do is, like, be with my team, have fun, give back to people, and not let resentment build up in me for the broader world right now, right?
Yeah.
Just to stay healthy and keep going.
Yeah, you build up by lunch. Yeah.
Exactly right.
Well, how about for the companies who are different, who look different? What are 3 things that people who are starting a company, who want to be on the radar of a fund like yours, what are 3 things they need to be thinking about?
For me, it's like, know the data, even though that's really hard, because in the data is the opportunity. So for me, it's always like, okay, wherever, like, the inequity is the greatest, that's actually where we should go, because then you've clean the system out, right? Like, if you just start at the bottom, everything rises, right? And so I think knowing the data, instead of using it as a way to be like, I don't want to get in, go, I got to get in, right? So what I'm saying is, this country can't be the greatest wealth power in the world if we don't solve this anymore. There's too many of us that look like us. There's too many women. Like, you have to invest. That's how you grow things, right? And so I think our macroeconomic condition is going to require us to do this. So whether people want to do it or not, they're going to have to get out of their own way. And so it's the time, and even though it feels like the opposite, right? Things going on with affirmative action and lawsuits against funds like mine are happening, and it feels like we're going in the opposite direction. I actually see this as opportunity. I see them setting precedents for us to be able to fight a different fight and go, if you're going to start saying you can't do things because the data shows it overwhelmingly affect somebody based on the color of their skin, we've got financial systems to take down and rebuild because all of them.
Say it again clearer so we can write it down in the record for the court.
Exactly right. It's precedents that I actually think is going to help us.
Wow.
So now's the time. The market's going to get harder before it gets better. I don't want people to get scared of that. That's the time to jump into things. That's the time where people are going to have to go figure out how to invest differently because the other stuff isn't working the way it's supposed to work. It's fragile. And so as that happens, I want folks to be thinking about this is the time. I want folks to hear me on, I'm going to say something to every founder here. Do you want 100% of zero or 15% of a million? That math is that math. And we got to stop. And I understand why we don't trust, but it takes us. We're the ones that are going to have to trust. It's not fair. It just is. We're the ones that are going to have to come into the system and go, how do we get shared economics to grow overall? You know, nobody invests in just one thing. If you're an investor, they invest, they blend portfolios. So when someone comes to the table and wants to do that with you, do it.
Absolutely.
Take the help. Egos are so big in this game because these are like people's babies. And I understand that so much. But help is so fantastic. And I don't care if someone cuts you $100 million check today, it'll be gone. If you do not know how to like take help, ask for help, and sort of take care of yourself, do what you're good at. You're not going to be good at everything. And so be able to acknowledge that so that like they can bring teams to the table. That's how this thing works. It's never been some brilliant person got a $100 million check and Facebook became Facebook. It was like he failed. They write him more money. You know, he gets more money, right? You know, but they bring someone to the table and make sure he doesn't make that mistake again. You're there even to this day. He's completely surrounded by people that are helping him run that company in a way that he could have never got it to where it is alone. And that is so, so important. Take help early, give up economics in a shared way if you can drive towards a shared mission. Because if we keep trying to do this thing where we want 100% of it because we either don't trust or we just think we should, we won't. Other communities share economics in a way that we have to open our hearts up, even though I know it's hard.
Well, how can people like Bennie and I join the fund? Give our listeners
yes.
I don't know.
What's the minimum? How can we help?
How do we get involved? How do we get involved with your fund?
Yeah, well, I am going to be raising for a fund too, which is where I want to see folks like you and Bennie and others come in, and we're going to create some creative mechanisms. It's a big fund, so we're going to get some big checks from institutional, but I will create some creative mechanisms around individuals as well too. It's a minimum of $250 to get into the fund, but I have the ability to change that, and we can pool that, if that makes sense. So pool the dollars together, and somebody come through a sort of something we call special purpose vehicle, or there's lots of creative ways in which we can think about doing this to get people into the fund.
What's a story about one of your founders who you guys came in, you helped them, and that eureka moment, or they got to the threshold, or they got to the place that they didn't even think they could go?
Yeah, and I think this is the perfect story. They'll know I'm talking about them, but I won't give out their name to rush them. They're phenomenal. So brother and sister team, Latino, they've raised $7 million, which sounds like a really big number, but it's over 7 years. And then now they were doing another raise, and that they came to us, and they were pre-revenue. And so folks couldn't connect the dot on how they built value into the company. Well, this is a company, the brother is a scientist. They have IP in 16 countries, FDA approval for both OTC and as a medical device on something they can charge a consumer $50 for. And the next product that's even close is thousands and thousands of dollars. So it's wound care, and he invented it, and it can't be replicated. He can put it in Band-Aids, he can put it on things. And no one would do that deal because they were pre-revenue. So it's like they're lacking science. I'm like, they built all the value in with the 7. The hard part's over. Now we go to market. Like, are you kidding? You know, exactly. Yeah. You know what's going to happen with our cash now when we go to market? That's all revenue generating my dollar. Right. And people just did not see it. And I think a part of that is what I've been saying about bias. A part of it is that, like, people don't really understand fundamentals of business necessarily just because they're cutting a check. So that's important to remember. And that's the way we think, is like, if I can see the levers that I'm going to pull. So when we were sitting with them in their deck, and just, they're both such great founders, they hit a slide where they said, this can be a $500 million company in 5 years. And I could quickly like look at the numbers and go, oh yeah, they're not, like, that's actually an understatement.
Right. That's conservative. Yeah.
And that was a moment. Like, I remember my partner like pulling up from the table and was like, done, right? Like, it was like those moments. And then you know, to see where they're at and to be a part of like getting them to market and actually growing. And like, we got a steal of a deal because I got in on a valuation from 2018 because they haven't upped their valuation because they haven't hit revenue yet. And I'm like, oh, you're worth a lot more. You know, like, so I was like, we got a great deal, and it was just like missed. Like, people just missed it. And they're all in as founders to just grow this company. They don't like have no ego behind them when it comes to equity. Like, it's just the best deal on planet Earth. And I think it's going to change the world on top of it. So then, you know, the everyday person and their healthcare for everyone, wound care for everyone. No one's even closing wounds, and this product does. Think about diabetes and ulcers and, you know, C-sections and just the market. So that is like my favorite story. It's like keeps me going. I'm like, that was the thesis. Here's the other thing. They don't have loans because the banks don't give them loans. They're completely under-levered. We can go get the financial system around them.
Do you think, and sorry to cut you off,
no, you're
but
good.
Do you think that your background in terms of a CFO and the approach that you took is why you saw those levers? Because it makes all the sense in the world if you're a venture investor and you're only looking at it. And I don't know, I'm still learning about venture and private equity for the listeners out there. Mm-hmm. But do you think it's because you saw it from a private equity background that made you be like, oh, this is a huge opportunity?
Absolutely. So, like, you know, I've had $15 billion P&Ls, like, set market cap forecasts for our company, for our division, right? And so where I worked was such a financially disciplined company. It was like, taught me everything's like so sharp. You understand, like, at the end of the day, it's about actually putting money to the bottom line, and it's about the consumer, and the consumer will always decide, even if it takes a long time. And so for me, it's always like, I'm always like, okay, what is going to happen with the consumer? And that's like sort of what I'm good at in money, right? I'm not an accountant. I have great accountants around me. I'm like it's the behavioral economist. It's like, okay, how much is this product going to make? Like, that's what I've done for a living, like be able to pull it out and put it back together. And, my business partner the same way, like, he comes out of corporate America, CMO of Walmart, head of strategy for McDonald's, created the dollar menu. So think about that. Like, we're
our next guest on the podcast.
Just a brilliant businessman, right? And that's like, both of us are just like fundamentals of business people. Like, we think that's the future. And so we're just approaching every investment that way, and we're requiring our founders to sit like, let's hit milestones. What do we need to get to revenue? Let's talk when we don't, which is what you would do if you were running a huge company, right? And so that's how we both still operate, and we'll bring even more of that kind of talent around us. I think people coming out of corporate America, execs, are really brilliant to bring into this space. And that's more how private equity works than venture anyway, but we're bringing that sort of to the startup space.
Are you any job openings? Because I'm come over there and work.
Are you a fan of the All In podcast with Shamath and David Sachs and Jason Calacanis and all those
I think
guys?
I've only heard one of them. Yeah.
Because you guys are all talking the same language, but they also believe that, like, your background, they harp on it, your background is vital for venture capital and private equity. You don't go to school to say, hey, I'm going to be a venture capitalist. You work in huge companies and you learn how to do it. So the venture landscape doesn't look like what it looks like, or the private equity landscape, or the reason why private equity looks like it, how it looks, is because these people have been in companies, or they've, you know, seen those huge balance sheets. So I think that's awesome.
Yeah, I think it's really under, like, it looks cool. I'm going to come out of school. I'm going to start my own business. That works for a very small group of human beings, back to my point. Yeah. Especially people that are coming out of very specific schools that are known to be able to get capital, like for an idea on a napkin. But I not just to get capital, but just to actually make your life easier and to actually grow amazing companies that we can sustain over time that are serving the consumer. And then those companies will change the whole system. Like, just spend some years doing the work. Like, people forget, like, you got to do the work. Credentials really, really do matter.
Instagram messes that up.
Yeah. Well,
Instagram is like, I raised this fund. I got the 2 and 20. I'm doing on all these trips, and now I get to pick. Yeah, I get to pick all these. I get to pick all these companies.
Yeah, exactly right. Now I'm just out here, picking companies and having a blast, and a lot of people are, and making a lot of money in ways that are interesting to me.
It's going to happen. They're going to get caught in these next couple of years.
Oh, months.
Because they didn't. I
think
do what you're doing.
Yeah,
they didn't take the time to actually look at what
volumes are down of new rounds raised are 86%.
Wow.
Year over year.
Wow.
Bankruptcies are up nearly the same percentage
of
startups.
You're going to get some more discounted value.
Correct. So all these assets are going to be in the field now. That's the way I think about it, right? Is that these startups
on the dollar for you.
There you go. So that's why we're doing the fund faster. The fund 2 faster than we planned on it. But that's what I want folks to think about. Like, that when the market's down, it's going to be our time. It's going to be their time.
Well, where can people find you? Where can they follow you? How can they get on the train?
Yeah, I'm at ShootSD on Instagram. I do a lot of this conversation on LinkedIn too. So go follow me on LinkedIn as well. And then we're going to be actually rebranding the fund. So you'll be seeing stuff about that soon, just changing our name. We invest in what I call the domestic emerging market. So yes, we invest in founders of color and women predominantly, but that is the domestic emerging market. It's the underinvested group within our own country.
Yeah,
right? People invest in the Venezuelan economy, which is an international emerging economy, but we've got our own sort of underinvested. We haven't invested in our people, I think, as a country. And I think that's about to smack us in the butt from a market perspective. So I'm excited to be a part of the solution when it does.
Well, appreciate you coming on the Gridiron Growth Podcast. This was incredible. Thank you.
Yeah, thank you so much for having me. What a fun conversation.